SwissBorg is now the official partner of my channel, so you can buy, earn, stake, sell, all in one secure mobile platform. Download using the link in the description, deposit €50 or more and you'll receive up to €100 worth of their native token CHSB. SwissBorg! Hello everybody, hope you're having a good weekend. It's very early, but let's talk about the death of Europe. It's not the death of Europe. I have obviously made some form of clickbaity kind of title to suggest that. What I mean is the death of the euro and sterling, potentially, for a few years, let's put it like that. So we've come to recognise recently that the parity is the new normal for the euro, and for the pound, it would appear to me that parity is likely to occur at some point, maybe this, but probably maybe next year. So there's two things that could resolve this issue, and that would be that the Federal Reserve decide to pivot, and so they're like, all right, okay, inflation is okay, it's going down, okay, so let's sort these rates out. We'll be a little less hawkish. We'll sort of soften the landing. There's no need to crash it. Or the Bank of England or the ECB and others decide that they're gonna try to really go hard on their rate hikes and push interest rates up higher and higher, because inflation's worse in Europe. Now, obviously, Europe has got other issues. Backdoor is Ukraine and Russia and stuff like that. So there's reasons why they can't really destroy their economy as fast as they'd like to. And I say that they'd like to. No one wants to destroy their economy, but in order to sort inflation, you could go down the route of the ruble, couldn't you? So obviously this is what happened to Russia. So here we go, and sanctions kicked in, and kapow! This is the Russian ruble to the US dollar. Absolute smash. That's a currency pair, by the way. 50% down in a space of a few weeks. Obviously because of the sanctions. Then what did Russia do? They didn't beat around the bush. They did 20% rate hike. A 20% rate hike, that resolved the issue, didn't it? Whoosh, all the way up to the top, a 200% gain. 20% rate hike. Alright, so this is just to give you an extreme example of what central banks can do to move their currency, whether it's up or down or keep it sideways. So whatever we choose to believe or interpret on these charts, and these charts are left mostly to do their own thing, you know, messing around with your currency to a large extent is going to have some side effects, you know. First of all, this is your MOEX, so your Moscow exchange. I mean, most of this is just kind of dead in the water anyway because of what's been going on in Ukraine. So it's not something you could look at and take away. But basically, what we see is, again, yes, sanctions have played a huge part. So big dump down, 20% rate hike. Recognize that for what it is, 20% rate hike, right? In comparison to what the 0.75s that people are all scared about over in the US, and they're even more scared over in Europe and Britain, I suppose. 20% bang, but it's not done the stocks any good. Again, the stocks are going to be held down by sanctions and lack of trading and all kinds of supply chain and all this sort of stuff. So it's not a reasonable comparison, but it is when you think about this is the most important thing that I want you to take away. Manipulation to the max, but that is basically what all central bankers are supposed to be doing. Manipulation, I suppose, is an appropriate term because that's basically what it is. Manipulation of the currency to make it either stronger or weaker. And look, there's pros to having a weaker currency. Yeah, there is pros to it. It's good for international trade, for instance. So lots and lots of companies based in, let's just say, Britain are based all around the world, right? So we've got the FTSE basically can benefit. UK companies can benefit from a weaker sterling in the short term. So to allow the currency to come down to an extent, yeah, of course it's not a good look, but you know, there can be some benefits from that. It's like what Trump was saying, wasn't he, when he first came into office? He was saying, look, the dollar's too strong, we need it weaker. It just promotes better business, better trade. It's relatively complex to start going into, but it's not all bad having a weaker currency, so long as it doesn't stay weak for very long. I remember the day of Brexit, when Brexit happened, it absolutely wrecked the pound. But on that day of a destroyed pound, FTSE was up about 7 or 8%. So it's, like I say, there are pros and cons to it. However, given the situation that's unfolding currently, central banks in Europe have their hands tied. They can't afford to dump their economy because their economy is getting dumped anyway. So for them to actually speed up the process any further is going to be a bit of a well, it's a bit of a problem. They can't really do it. We're going through this winter as continental Europe, or some of it at least, is in a real problem, having to ration electric and gas. UK is kind of insulated to that to a large extent. There's going to be higher prices, but there's no fear of running out. I think there's only 5% of the UK is operating on Russian gas, so the UK aren't going to run out. But continental Europe are going to have some issues, some proper issues. You know, they have to use storage and blah 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 blah. And this could have a real negative effect on their economy because, obviously households need to be warm, they need to be powered, and certain industries gonna have to take it on the chin. And if they run out, then that's a big problem for the economy. GDP will shrink because industries shut down or close down, and they may never reopen. Anyway, like I say, I told you it's going to be a bit of a complex issue. So let's just talk about the currency, because I did make a video on this about 2 or 3 weeks ago, but it was in the context of Bitcoin. So let's just think about it in the context of I suppose, the currency pairs, right? So this is Euro, weekly, short, death cross, no good. Monthly, itchy cloud short signal generated a few months ago, continuing to play out. Looks like we are going to be entering the deeper dive towards our previous lows on this most recent 20 years ago area. So we're going into the 80 cent zones, really, the lower 80 cent zones, and then probably down from there, because there's nothing to stop it outside of central bankers changing their direction. So by that I mean the Fed could sort this out, but the Fed, it's not that they don't care about Europe. The Federal Reserve care about the US. It's their job to deal with inflation and other issues within the US. So yeah, it's unfortunate what's taking place over here in Europe, and you know, a strong dollar is going to exacerbate a weaker euro, because things like oil and many other things pegged to a dollar, it's priced in dollars. So you're going to be paying more. You're going to be paying more. Not only is the price of oil more expensive, but you're going to have to be paying more with your weaker currency. This is the whole thing about Russian ruble recently. They're saying, look, you can buy stuff off us, but it's got to be in the ruble, okay? It can't be in dollars. It's got to be in the ruble. Obviously, there was other reasons for that as well. But I mean, you know, it's going to be the same sort of deal over here. They're like, oh my God, not only is oil more expensive, but our currency is way weaker than it was only just a year ago. Wreck City, same problem for the UK as well. So with that comes higher inflation, because not only is the price of oil more, but you're having to pay more with your weaker euro. So down we go. There's only one thing you can do, is just allow it to go down, because your hands are tied over in Europe and in the UK. Your hands are tied. You can't afford to crash your economy like something like America could, because America can sustain these rate hikes and more, and sustain further downside. Their economy, despite what the charts look like, is strong. It's a strong economy. It's a powerful country. Whereas it looks like Europe is kind of falling apart, and there's really nothing they can do about it. They honestly are. The best way to look at it is their hands are actually tied. There's nothing they can do. So expect nothing more than a weaker euro constantly, probably going on to make new lows throughout the next 6 months or so. It will speed up. It's like a snowball effect, really. It's just picking up pace, going lower and lower and faster. You'll see this with the pound as well. Wouldn't it even surprise me to see the pound at parity before Christmas? Difficult to put a time frame on these sort of things, but you can see the speed of the declines now, and the losses here on the weekly. So it's not been long at all. So 2022 January, it has lost 17%. Now, when the whole Russia-Ukraine thing happened and the sanctions kicked in, and we saw this take place with the euro and the MOEx, I said at the time, I said, look, this is a fast occurring crash in this currency. And this index, but the same thing will happen to Europe on a slower basis, because effectively sanctions don't benefit anyone. You know, they're designed to hurt one country, but also at the expense of all the other countries that do deals with that country in the first place. So it's like the expression, you cut your nose off to spite your face. And that's basically what sanctions are. Obviously, Europe take the biggest slice to the face because they're on the back door. America, yeah, they're not going to benefit particularly from sanctions. They're going to feel it too, but they have everything that they need. They're a self-sufficient country. They make enough food for themselves. They export the extra. They make enough fuel for themselves, and they export the extra. Whereas Europe, very much interconnected. They need all this. They need to work as a block, and they need more than just what takes place in Europe. So, European and Britain, it's all the same, really. It's all Europe, but you know what I mean. Designed to go down. So this shows that there is really nothing better at this very moment in time than holding dollars. And we all complain about the inflation in America. There's nothing in comparison to what the side effects of dealing with that inflation in America is having on Europe and other countries as well. We just focus on the euro and the pound because they take up the bulk of the Dixie. So let's get to the Dixie real quick. There is a chance and a hope that we do find a rejection on this level and we start to go sideways and maybe consolidate down, putting on our moving averages. You can see that we could actually come down reasonably well into the center of the channel perhaps, but for the most part I'd expect to stay in this channel probably for a very, 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 very long time. These ascending channels like this do often break down, and you'd expect that over time. But like we said yesterday, this is a more or less a 20-year channel that's taken place. So to expect a breakdown from it anytime soon is unreasonable. And if we were to break out of it, I mean, that's super bullish because you're breaking out of a bearish formation. So you really are looking for really, really significant highs. And with everything we're saying about the pound and the euro and their short signals and their current trend and the fact that their hands are tied, they can't move to the same extent that the US are doing, then there's nothing to stop it from going down. So long story short, there's a variety of reasons, technical and fundamental, to expect the dollar to gain in value when it goes to looking at the euro and the pound, which should only really keep the Dixie afloat. And there's only two things that can really do it: other central banks raising rates faster, which I don't believe they're prepared to do because they can't really, because their economies are already officially in recession. So by doing that, you crash your economy. However, if you were to do that, then you'd see a bit of a ruble scenario, and you'd say, let's just say the Bank of England said, right, that's it, that's enough. Let's nip it in the bud. Let's crash the economy, press the reset button, and then they do a 10% rate hike. That's it. That's all you really need to do to sort out inflation. It sounds silly, but that's technically all you need to do. Inflation's running rampant. It's ridiculously high. What do we need to do? Now, what's inflation at the moment in the UK? Is what, 10%? Right, let's raise interest rates 10%. That's all you need to do. It's going to have a massive impact on the economy, but the currency will sort itself out. You'd see that reflect on the Dixie. You'd see a rejection wherever. The Dixie would start to go down. Same thing for Euro to a larger extent because it's a bigger economy. We talk about the entire of Europe, the entire of continental Europe, everyone in the EU. Then if the ECB were to do that, then great. But they are in a worse scenario than the UK because they have to cater to every single country within the EU, which vary in size, and each one of them has their own individual economy, but as a block they share a currency. So it's a real bit of a problem for them. They really cannot afford to raise rates in any significant way. But if they were to do that, then yeah, you'd see a rejection on the Dixie. And obviously the only other thing that could do it would be for the Federal Reserve to say, all right, we'll start to chill out now. So, and then basically the rates will incrementally increase in the European areas and decrease in the American ones. So it's not so much a story of crypto today. It's a story of what is driving these lower prices and horrendous FX markets. And it's basically a reflection of who's got the most powerful economy, who can sustain the most damage, and the winner, quite clearly, is America. Strongest economy in the world. They can afford to do this. Right. that's basically it. So the death of Europe, it sounds like clickbait, but it would appear to me that the death of the currency is what we're speaking about, and the only thing that can stop it would be central banks, and they can't really do that given the fact that their hands are tied. So think about that when it comes to making any decisions on what it is you want to buy, where you want to buy it. We are really at the mercy of the European and American central banks, really. So there is nothing else that can be said. Of course, there's going to be bounces along the way. There's going to be TA and chart setups along the way. But generally speaking, we're not really looking to enter into a new bull market really until all of this is resolved. Right, thanks for watching, guys. Hope you have a nice day. Take it easy.